In today's episode, I'm going to teach you how to trade the micro pullback strategy. Just this morning, I made over $78,000 in 2 minutes and 27 seconds on a micro pullback. It is hands down my favorite way to jump in when something is strong and has momentum. So let's go ahead and jump on the screen share because we've got a lot to cover. So this is the micro pullback setup right here. And you can see today, I'm up $175,000 in total on the day, but it really kicked off with that micro pullback right down there. So what happened was the price squeezed up really quickly here on breaking news, and then we got this momentary pullback, and that, for me, presented a low-risk opportunity to buy something that had a tremendous amount of strength. I got in right here at about $13 a share. It squeezes up to 16, it pulls back, it goes up to 17, 18, 19, 20, 22, 24, 26, 28, 30, all the way to $35. That is an incredible move, over 400%, and all of this happened in less than 3 minutes. Holy smokes. Now, the micro pullback strategy is nothing new for me. This was just a really good example and a great opportunity to use this as a case study to show you guys. So I actually have my live trades from this position this morning, and we're going to break those down during today's episode. But before we do, let's jump back onto the slide deck. I'll show you 2 other examples of micro pullbacks. We've got one right here. So a big squeeze up, 2 red candles. That presents the buying opportunity right here for the next leg higher. That's $52,000 in profit. And here's a third example where we got the micro pullback right there, which then led to the next rally up, a second micro pullback, and a third push just a little bit higher, $27,654.62. Now, for those of you guys tuning in for the first time, let me introduce myself. My name is Ross Cameron. I'm a full-time trader. I funded my first account back in 2001. So I've been trading for quite a long time. I've had some ups, I've certainly had some downs, but I'm probably best known for turning an account with less than $600 into more than $12.5 million of verified and independently audited trading profits. Now, I share that with you not because I want you to assume my results are typical, but because I want you to know beyond a shadow of a doubt that what you're learning today is a real strategy and that I'm out here putting my money on the line every single day trading it. So I also want to tell you one thing. In case you haven't heard, trading is risky. My results aren't typical, but I really encourage you to practice in a simulator before you ever put real money on the line. Because if you can't make money in a simulator, you have no business trading with real money. So let's go ahead and jump in here. Now, for those of you guys who are brand new, I do hope you subscribe to the channel. I hope you hit that thumbs up. For those of you guys coming back who are regulars on this channel, I hope you hit that thumbs up because we're going to dive into a full-length training right here, right now. Okay, so what is the micro pullback? The micro pullback is essentially you get this rapid move up. It's a momentary dip before the next leg higher, and that's another $35,000 of profit right there. So what I'm looking for in a micro pullback is for that momentary pause. Now, when you have that momentary pause, really 2 things can happen. On the one hand, and I'll jump on the whiteboard so we can kind of draw this out. On the one hand, you can have a surge up really quickly like this, and then during that momentary pause, what happens? A little pause, and then all the way back down. We've certainly seen that. Now, that's a really big candle, but we've certainly seen that where you get what we would call a round trip. So I like to give the price action a chance to stabilize, to prove that it can hold. So this is the opportunity where it could fail. And I'm giving it all the chance in the world to fail. But when it does not fail and it holds up, then as soon as we begin to see buy-in coming back in, that's where I'm jumping in right there for the next leg higher. So the reason the micro pullback strategy works is because it is one of the fastest ways to jump in something that's strong while still managing your risk relative to a recent pullback. Because this right here becomes what? Support. Now, if you bought in the middle of this green candle here, where's support? Well, it's way back down before the move started, right? It went up so quickly, it hasn't had a chance to really pull back and prove what level it can hold. Now, we know that markets can be irrational, and sometimes we'll see, a rapid surge up, and then a complete reversal. Sometimes this is like a knee-jerk reaction. A company will put out news and immediately people jump on it, and then they realize, or maybe smarter people realize, that news actually isn't good. Or wait a second, that's the same exact headline they put out 3 days ago. So that's not news. And then what happens? The price goes all the way back down. You get a full round trip. So I like to let it sort of consolidate here and prove that it can hold before jumping in. So the reason that micro pullbacks work so well is because traders are watching stocks that just hit high day scanners. When you get that big squeeze up, what happens? The stock is hitting scanners. So if we look over here at my software here, this is right here, a small cap high day momentum scanner. So what it's searching for are stocks that are moving up right now in real time. And for the most part, as a minimum threshold, it's not even going to alert me if something isn't going up at least 10%. So we're looking for large moves, which means you're rarely going to see a stock like Nvidia or Tesla or Netflix on this scanner. This is searching for volatility. So when we get volatility, we get that rapid rate of change. That's when we get excited. And of course, SBET was on the scanner today as it peaked right here at change from the close, 695%. Wow, that's an incredible move. So what drove that momentum was, of course, a catalyst. But the fact is, when a stock is hitting this scanner right here, suddenly a lot of people are watching it. So why do micro pullbacks work? Because a lot of people are watching the scanner. And now they're watching and they're waiting. They're waiting for that confirmation that this is going to work. Most traders are watching big percentage gainers because when you have a stock that goes up 50%, 70%, 100%, 200%, whatever it is, you just know that this is where all the attention is going to lie today. This is where we're going to see a lot of volume. And if the news is really good, there's no reason it'll stop at 50 or 100%, as we saw today with a nearly 700% move. Number 3, the micro pullback works because the stock is obvious. Obvious means everyone's paying attention to it. And so therefore, predictable patterns are more likely to resolve as you would expect. Now I'll hide my video here so you can see the bottom of this. Number 4, the stock is currently moving quickly right now. Now, as traders, we have a little bit of a reflexive instinct that if something is moving, we're attracted to it. So it's kind of like a dog chasing a squirrel. You get that rapid rate of change and we're quick to jump on it because we know that when we get those big rates of change, that's when we can see some really big gains. Number 5, a micro pullback is a moment of rest, and that represents a dip. It presents as a dip. Dips create what? Support when they hold. So you get a dip, it holds this level, that's now support. So entries near support carry less risk. Therefore, a micro pullback represents one of the fastest ways to buy a strong stock. Now, there's different variations of the micro pullback. Sometimes they look like this right here, and other times they look a little bit more like this. They're very quick. You get just a moment of dip, and then it rips. Or in this case here, it squeezes up, it opens a little bit lower, it dips down inside this candle, and then surges higher. So it's almost indistinguishable when you're looking at a 1-minute chart because it's so quick. But in fact, that bottoming tail represents a little pullback. And this would be the least really micro pullback where essentially it pops up, it opens, but it could pause there for a moment. And so if it's pausing, maybe that's because there's a hidden seller. Maybe there's just a momentary pause on the time and sales and on the level 2. There's no orders going through. And then that's the moment where people could panic and it could sell, or it holds and then the next leg higher and off it goes. Now I'll tell you, trading micro pullbacks, I know it looks easy when you see some of these examples, but a lot of beginner traders make some mistakes. And so I'm going to share with you 3 of the most common mistakes beginner traders make when trading the micro pullback. What I'm also going to do for all of you guys tuning in today is I'm going to give you instant access to my micro pullback strategy PDF. It is a resource that you can download. It's going to include my stock selection PDF. So it's the 2 PDFs combined. And I'm going to post the link. I'm going to pin it to the top comment. And I'm also going to link it in the description so you can download this resource. You can print it out and you can start using it in your own trading today. But as always, I want you to practice these new strategies you're learning in a simulator before putting real money on the line. So here's the first mistake beginner traders make when trying to trade a micro pullback. Mistake number one, not applying on obvious stocks. You try trading a micro pullback on an obscure stock, it's not going to work. Why do micro pullbacks work? Because so many people are paying attention to this stock that has just popped up, has news, and is not dying, right? The very fact that right here it popped up and it's holding is what's catching people's attention. The second it was hitting the new high, it was hitting scanners. So that's what brought it to people's attention. So now the stock is up, let's say 40% on the day. You see that it's got a breaking news headline. And so now you're pulling it up and you're saying, all right, I'm going to give it a chance to fail. But if it doesn't fail, I'm in. So what are the types of stocks that are more likely to make these big percentage moves? They are stocks that meet the following 5 pillars of stock selection. This is also documented in the stock selection PDF download that you guys can get access to. Number one, most day traders prefer lower price stocks, retail traders especially. We have smaller accounts. We don't have 20, 30, 40, 50, $100 million accounts. We've got small accounts. We want to buy a stock at $2 and sell it at $3 for a 50% gain, or sell it at 4 or 5 for an even bigger percentage gain. If we find a stock that's at $20 a share or $30 a share, while we certainly can trade it, the likelihood of making a 50% or 100% return when it starts that high, well, the likelihood goes down. So usually most retail traders prefer lower price stocks, which means when you have a lower price stock hitting your scanners, it's going to get more attention. Now, SBET, the reason it continued to gain attention is because of the fact that it started this morning at $9, $8 a share. It went up so fast that it continued to maintain people's attention. If it had started at $50 a share, it would have been a totally different story, because it went from 50 to 53. It's only up like 5% on the day. It's not a big percentage gainer. And if it's not a big percentage gainer, people aren't going to notice it. So this scan right here is called our top gainers scanner. And this is a very common scan that traders will use. It's available on a lot of different platforms. It's showing you the leading percentage gainers in the entire market. People use this for all different types of financial markets. People use it for cryptocurrency, for showing the leading gainers in crypto markets. People use it for Forex pairs, leading gainers of Forex. People use it for futures. Generally, active traders are going to be trading what is the leading percentage gainer, because that's what's going to have the most volume each day. As active traders, we profit from volatility. We don't make money buying something at 5 and selling it at 5. We want to buy something at 5 and sell it at 7, 8, 9, or 10, right? We want that big change. Where does that big change come from? News. Now, the same stock, like trying to trade NVIDIA or Tesla every day, they don't have news every single day. So you get volatility because they go up and down, but they're expensive, as you probably well know. And the volatility is not, the percentages are not as big. So yes, there are hedge funds that could put $100 million into this and pull, a couple $1 million of profit out on a 1 or 2% move. But a 1 or 2% move, if you're trading with a $5,000 or $10,000 account, is not going to cut it. It's not worth it. So you need those bigger percentage gains, which is going to push you down into the lower price areas of the market. So when you have a lower price stock that starts to hit scanners, a lot of people pay attention. If it's already up at least 10%, it's breaking the first standard deviation of doing something fairly exceptional. In fact, on any given day, out of nearly 10,000 different stocks or financial ETFs that you could trade, there's usually less than 100 that are up more than 5%. Going up more than 10% is really significant. So when you think about day trading as, Ross, how do you find these big percentage movers each day? You found the one stock in the entire market that went up 700%, while every other stock was, choppy. That's like finding a needle in a haystack. How do you do it? Well, you need a system. And so the system is understanding the type of stock more likely to make that move, the profile of that stock. And then once you know the profile, how do you find it in real time, in the very beginning of the move? And so what I'm looking for is a stock between $1 and 20 that's up 10%, that has 5 times higher volume today than its 50-day average, and that has a news event. These are 4 characteristics of demand. This is identifying and really displaying high levels of demand and interest. Now, how does the price go up? Because of an imbalance between supply and demand, right? That's that basic economic theory. And that's true, of course, in the stock market. And the supply is the number of shares available to trade. And so if you had these four characteristics of demand, but the supply was, I don't know, 1 billion shares, that the company had sold 1 billion shares onto the market, it's not going to go up 100%. It's just never, it's not going to happen. In fact, it probably wouldn't even be able to go up 10% if the shares outstanding were 1 billion. But when you have smaller companies that have sold only 10 million shares onto the market, only 5 million, only 3 million, the total float, which is the number of shares available to trade, is so small that when you have this high level of demand that comes in, typically because of breaking news, it can create an incredible imbalance. And that's what results in these big percentage moves, which is exactly what we like as retail traders. That's what we're looking for. Now, the first mistake is not trading obvious stocks. So I see this all the time, and I'll show you the second mistake in a second, but let me just give you an example. So let's just say, for instance, someone says, hey, what about NVTS? And I'll say NVTS, it's 130 million share float. It's not, now granted, it is up 48%. It's a pretty good move today. I'm pulling a stock off the momentum scanner. But generally speaking, when we get these higher floats, you're gonna see a lot more choppiness. These are not gonna be as clean. Now, I'm gonna look at the overall market, the S&P 500. And what you see is the S&P 500 is up today. So these larger float stocks tend to have a closer correlation to the overall market, which means they're used as a proxy. If the market goes up 2%, those stocks go up maybe 20% because they're smaller in market cap, but they trade really in sympathy to the market, but with a higher sort of beta, a higher percentage. But in order to trade them, you have to be paying attention to the market because that is the catalyst. So if you want to trade the overall market, you can certainly trade the overall market, but you're going to find yourself getting chopped out a lot. I like to trade the individual stocks that are bucking the trend of the overall market because they have their own catalyst. So LVWR here, 18 million share float. So the float's a little on the higher side at 18, but not outrageous. That's still fine. High is over 100 million shares to me. And this has gone from 250 to 3, a little pullback, and then from 353 up to 4. That's a huge move. It's up 291% right here, right? So these are the types of stocks that are obvious. If you say, hey, is Bank of America forming a micro pullback? No, it's not. It's a 7.5 billion share float. Yes, it's up because the overall market's up, but don't get fooled into thinking you'll be able to day trade this with any degree of consistency. It's not the right type of stock. So first mistake is not applying the micro pullbacks on obvious stocks. The second mistake is buying when the MACD is negative. The MACD is a technical indicator that I use on the 1-minute chart. It's the moving average convergence divergence indicator, and it tells us essentially how the stock is trending. It's a very simple indicator, and when the MACD is positive above the signal line, as it is right here until that moment there, we're in a positive uptrend, which is easy to see because the price has made a quick squeeze up. But I have found quite consistently that when I try to trade to the long side, when the MACD is negative, that we have this overhead resistance. They just don't seem to work. I think part of it is from algorithmic trading. So algorithmic trading, high frequency trading algorithms can be tuned to trade stocks certain directions based on a number of underlying factors. So for instance, being more bullish on the high frequency trading algorithm when the MACD is positive, or being more bearish and creating that upside sell side resistance when the MACD is negative. So when we see these MACD crossovers, we often see these pops. We go back to negative, and then we go back to crossover right here, and that was a fantastic move. And then we kind of go sideways. We don't quite go negative. We stay positive, and then we go negative right here for a deeper pullback. So buying when the MACD is negative is something that I really try to avoid in my trading. While there may be rare instances where I will do it, I generally find that I make the most money when the MACD is open. So that's the second mistake to be really aware of. The third mistake is holding too long. So let me share with you some exit indicators of the micro pullback strategy, and then we'll go ahead and jump into the charts, and I'll show you really the anatomy of how this pattern works and how I trade it, including the live trading archive. So What are our exit indicators? Number one, a large sell orders, plural, certainly, on level 2 or seeing pegged orders. So this is something that we would look for right on the level 2. This is my level 2 window right here. Currently, I see a 4,200 share buy order at 35. There's no real significant sell order. 35.69 is only one share. So I wouldn't say this has any big sellers right now. But when we look at the live trading archives, you will at some points see some larger sellers that pop up. So if all of a sudden I saw a 200,000 share seller on the ask right here at 36 or coming up at 36, that would concern me. I would look at that as being a form of resistance. So if I'm in a trade and then all of a sudden I see large sell orders come out, I'm going to recognize this is going to be a high likelihood probable resistance at this level. I would consider a large order to be 25,000 shares or higher on a stock of this price range. A lower price stock, it's not uncommon to see bigger orders. Certainly anything over 50,000 shares is quite large. Even on lower price stocks, psychologically it's large. And more sophisticated traders typically know how to hide their shares. But beginner traders don't. So a beginner trader may throw out a big sell order and they've been holding for a while and they're just happy to get out. So that can be a problem if you have to work your way through all of these sell orders before breaking to the next level. Now, a pegged order is a very specific type of order that will be pegged to the offer. And so let's say there's a 100,000 share sell order at 35.50 or 35.33. The second the price moves down, the sell order moves with it. So if it had been at 35.50 when the price came down to 35.33, it would have come down instantly. So there's no pegged order on this. But the way a pegged order works is it's pegged to the offer. So the price will be dropping and that order stays fixed at that level. And it has the effect of pushing the price down. And essentially it will push the price down until finally there are people that decide to buy those shares. So anytime someone tries to undercut that order on the ask, that'll automatically come down to that price. So it's a very bearish and very aggressive sell order. Now, a large topping tail is also considered bearish. And if I'm in a position and suddenly we have that topping tail form where the price squeezes up and then starts to drop back down, that topping tail is bearish. In fact, any topping tail is bearish. This would be a gravestone doji when the candle's flat. This would be a shooting star, right? So we don't like that. And then a candle, just sort of like this, sort of like that. It just has a small topping tail. It's not as big of a deal, but it just shows that the price pushed up and then got pushed right back down. Bottoming tails, conversely, are bullish. So we have that bottoming tail, and then what it means is that the sellers pushed it down, and then the buyers bought it back up. So right there is bullish. So bottoming tails are bullish, topping tails are bearish. Okay, so exit indicators, selling large sell orders on the level 2, large topping tail candles, and then high volume red candles. But if you wait until the red candle has closed, well then by that point, gosh, I mean, you've sort of missed the early exit indicator because now the candle's closed red. So if this is a 1 minute chart, you had a lot of time in here to recognize a topping tail is forming or this candle is lower than the open, it's currently red, there's only 10 seconds left, it's going to close red, and if it does, then that's going to be what shorts are going to use as an indicator for a reversal. And then we get that drop back down, which is not good. That's not what you want to see. So those are the 3 most common mistakes I see traders make when it comes to trading micro pullbacks. Trading the wrong stocks, not following the MACD, and holding too long. So now let's talk about this micro pullback strategy. What we're looking for is that quick rate of change and then that first little pullback. So the rapid move up, the little pullback here, and then what's our entry indicator? It's the first candle to make a new high. So I'm all about momentum trading, but momentum is always like this. Nothing goes straight up. It goes up and then it dips down. It goes up and then it dips down. So if you sit down in the middle of the day, like right here, and something has already made some big moves up, where do you get in? Do you just buy it right here? That might work, but you might end up holding into the red. And it might be, misfortune that it ends up going up and then kind of going back down. So wouldn't go quite like that, but you get the idea that you end up being in a little bit too high and now it's trending down. So you caught the top. So what I'd rather do is let it ride a little higher and wait for that pullback and try to time my entry as close as possible to the bottom. Well, how do I know that it's the bottom? It's not going to go lower. I wait for that first candle right there to make the new high. And that's where I jump in. So to animate this a little bit, let's say, for example, we've got a stock that hits our scanners right here. So it's hitting the scanners, it's surging up, and boom, we've got that big green candle. We love that. We got a second green candle. Awesome. We got a pullback. Okay. So as it was squeezing up right here, it was hitting our scanner, which gave us the opportunity to pull up the chart, to look at the news, to kind of understand what's going on with this, what's the catalyst, what do we like about it? And it also gives us a chance to look at the 200 moving average, the daily chart, and sort of try to understand, are we near a resistance level? Is it strong? Is it weak? What's the history of this stock? Is it had a history of selling off, et cetera, et cetera. So in the case of SBET today, this squeezed up over the last 2 sessions into the 200 moving average. But this morning, it was already above that level. So that was very bullish coming into the day already. All right, so we get that rapid move up. It starts to pull back. And now I'm thinking, look, right here, where am I a buyer? I'm a buyer here if this candle's green and it breaks that level. If this goes lower, I'm not doing anything. I'm sitting and waiting. It goes lower. All right, so that candle closes. Where am I a buyer now? Right here, if this candle breaks the high of that candle, and what's my target? A retest of high a day. What's my stop? The low of this pullback would be my max loss. And so I'm waiting. And if that candle breaks, then that's my entry point right there. So I'm getting in right there for that first candle to make a new high. And that's our resolution. That's what we want to see, that surge right back up. Now, it's true that there are times where we won't see that perfect breakout. We want to see that, but it doesn't work exactly like that. Let me show you this real example. So this is a chart of a stock I traded. We get the squeeze up right here. We get one red candle, a second red candle. So what are we looking for? The first candle to go green. So right there, that candle opened and surged up, and right there it went green. It broke through the high, and that was our entry as we got to squeeze through the new high. Here's another pop quiz. So we've got this long rally up. All right, so you sat down right here in the middle of it. You can't, there's nothing you can do. You missed the beginning of it. It's going without you. All right, let's let it go as far as it wants to go, but give it a chance to pull back and create support. So it dips down. Now, what do you remember about that candlestick shape? That has a bottoming tail, which means it's bullish. So already it's sold off. It was a big red candle, and then buyers must have come back in off the low. Now, they might have been a little aggressive getting in that early, but what we're going to do is we're going to wait for that first candle to make a new high, which could be right here. It might not be, but it could be. And if it is, that's where we're buying. And sure enough, it is. And that's a nice squeeze all the way back to the high. So from 360-ish, 370, it goes through the high a day. It goes all the way up to here, 460, and then it pushes even higher. All right, now what about this? Is this a micro pullback? Now, we look at this and I would say, oh, yes, you've got a pop up, a pullback, a pop higher. But what do we have going on here? Notice that topping tail. Now, so we don't love those topping tails. What else do you notice about this? Higher volume selling. What else do you notice? The MACD is going, it's positive, but it's heading negative. That's not a good setup. No, we wait. So you see, it's very easy as a beginner trader to get a little confused. You might think, oh, that looks okay. I don't know, it's up quite a bit. No, it's not. What about this next one? Is this an area we should be looking for a micro pullback? Absolutely not. It's going sideways. This is not something that we want to be trading. That's not going to work. What about this? Is this something we want to be buying here? Well, it already pushed higher, pulled back, pushed higher, pulled back, pushed higher, and now we're kind of on the back side of the move. Check the MACD. It's negative. We don't want to be buying that. That is not a good setup. We want to buy strength. Strength, good. Selling off, higher volume selling. There's more selling than there is buying. That's not going to work. But then we get back to this. Here we go. Now that's something we can work with. The rally up, the pullback, the push higher, right? We can work with that. MACD is open, positive, little dip, and then it surges higher. What about this? It pops up, going sideways, MACD is open. We can work with that. That is a pattern we like. How about this? Oh, this one I already showed you. So we got the pop up, the pullback, boom, we like that. Here's another one. The pop up, the pullback right here, MACD is still open, light volume selling, and there we get that resolution. Now this one ends up going back up to here, not as high as others we've seen, but still can't really complain. It's a pretty solid move. So now let me show you today's trade. Okay, so we've got SBET right here. So this is going to be a live trading archive. Now, typically I reserve these for members at Warrior Trading, for Warrior Pro members, but I'm going to show this one to you. It's not going to display everything that I show to Warrior Pro members, but you're going to see quite a lot. All right, so we've got the stock right here. It is coming up to 8 a.m. And at 8 a.m., we have got breaking news. Now, initially, the price dropped. We went red. And then all of a sudden, we're surging up right here. So as we're surging up, I'm watching this, and I'm looking for what? A micro pullback. So we just tapped 13 right here. And I could buy here, but where would my max loss be if I got in right here? So let me just pause this. My max loss would be way down here. That's way too far away. So I need to wait for it to base out a little bit. So it just popped up to a high of about $14 a share. Now it's starting to pull back. So I'm going to come over here. I'm going to click the button on my chart. And this right here is a micro pullback. So what you see right there, that was a micro pullback and I just bought. You could see that, right? That micro pullback right there. Let's rewind it. We'll just watch it one more time. This is on this trade right here. I'm going to make, let's see, I wrote it down, $78,192.05. And it's going to happen in 2 minutes and 27 seconds right here, right now. So let's, So let's go back to this right here. So we're coming up to 8 a.m. All right, so there it is. Okay, so we're coming up to 8 a.m. So we'll go back to that first pop. So we drop down, we then pop back up. So the problem is the low of that bottom, although it's bullish that it bounced off that level, it now creates a huge distance between a potential entry and your max loss. So it's hard to manage risk right here. Now this stock was already on our scanners. I was already trading it pre-market as a continuation setup, and then all of a sudden we got this fresh breaking news at 8 a.m. So we hit a high of 13 right there. We're going to go up to 14 as you remember. So we're going to pop right there. There we go, up to 14. Now it's going to dip down. I'm going to come over here. I'm going to have to adjust my chart for 1 second. So now that little red candle is forming. This is on the 10-second chart. You can trade micro pullbacks on the 10-second. You can also trade them on the 1 minute. So right here, we're pulling back, and I'm going to get in right there. First candle to make a new high. And I'm the type of trader that is usually pretty quick to take profit off the table. And I just went from 11,000 on the day to 38,000. Just like that. I'm not done. Let's keep watching. So I'm holding right now at 1381. I'm now up 41,000 on the day, and I decide to add back to my position in 1471. I take profit as it surges higher. It goes up to 15. So this is what we got. Micro pullback right there. On that trade, I just made $40,000, but I'm still holding the position. And I add to the position, and I'm looking for the squeeze through 16 and to 17. Now we've got $18 on the share, $18 on the ask, 19, and I'm up 68,000, 73,000, 75,000, and now we're up to $20 a share. Holy smokes, guys. Micro pullback there, micro pullback there. Did you see I added on that micro pullback? So I actually traded both of them. I was still holding a position from here, and then I took profit, and then I added back right here. I'm now at $82,000 on the day. It's going to go a little higher, up to $25, $26, $27, $28, $30. $30 a share. $31, $34, $35 a share. That is our high a day. 420%. Wow. That is an incredible move. Here's the catalyst right there. A $425 million private placement to initiate an Ethereum treasury strategy. And now it starts to dip down. So I sat there in that little move, locked up over $78,000. That was pretty wild. Should we back it up? All right, let's back it up. I'll break it down again. So what are we looking at? Right here, we get that first pop. And that first pop, this was that moment where if I had just bought right here blindly, it would have been too reckless because my max loss would have been way down here at 10. I needed it to pull back for a second and not reverse all the way back down. I needed it to hold, and it did. it popped up and then it holds right around 1350. So it dipped down for a second, but it bases out, it holds that level, and that's where now I'm looking to jump in. So we've got our high of about, the high of this move right here must be around just 1378. So right now it's dipping. And the very fact that this was a bottoming tail on that candle gives me conviction. So now I've got my order ready. And as soon as I see green on the tape, right there, as it pops back up over 1350, I'm adding at 54, 64, 74, and immediately I'm in, and all of a sudden I'm up almost $1 a share. Right there, I take, let's see, so I'm up 87 cents a share right now as it hits 1465. I'm up $1.47 a share. Now, when you get in a trade and you go up $1.47 a share, usually the right move is to pay yourself. Now, I wasn't going for a home run trade on this. I wasn't. I was just doing a micro pullback, and holy smokes, it went up $2 a share before I even saw a single exit indicator. So what was my exit indicator here? We hit $15 a share, which is a whole dollar psychological level of resistance, and we stalled out for a second, so I began to take a little profit off the table. So I took some profit off the table there, now at 41,000 on the day, and then it holds. So what I ended up doing here is, you'll see my cost basis change from 1374 right here to 1381. I added, then I took a little profit, and then we're going to see it change. Right there, I added back. So now I'm back in at 1563 because this was that micro pullback right under 16. And now all of a sudden it goes up to 1540. I take some profit off the table, holding at 1471. Right? So this right here, right now, is our next micro pullback. So I'm currently holding at 1471, and I just added. Now I'm in at 1557. So that was the micro pullback right there. I added, it breaks through 16, 17, 18. I'm up $2 a share. Wow. There's $54,000 on the day. There's 58. See, I take a little profit into strength, selling on the ask whenever I can to get the best price. Now I added back at 18, and now it's at 20. I take a little more profit off, and I'm at 75,000 on the day. Now I'm going to add again up here, and this is my highest risk add. At this point, I have such a cushion. So I added there at 2050 for the break at 21. It hesitates for a moment, and I'm like, I might have made a mistake. And then all of a sudden it breaks through. I take a little more profit off the table. And then here it really pulls away, and I did not add again. I was like, I don't think I can add this high anymore because we don't have a micro pullback here in a really established sense. It goes all the way up to $35 a share. I'm still holding up $12 a share on my remaining position. Unbelievable. It peaks at $35 a share. I take a little bit more profit. I shave a little more off as it comes back down. And that's what gets me up to about $88,389.19. That was a $78,000 winner in 2 minutes and 27 seconds, trading a micro pullback. Now, that was not the end of my trading day on this stock. Oh, I kept trading it, and we got some really nice moves. Where was it? Maybe right around here. We got this second leg higher. This was at $28,000 on the day. And what do we have right here? What do we get? What are we getting right here? This is a micro pullback. Right there, we've got another micro pullback. The pop-up on the 1 minute, the micro pullback, and let's watch this. So right here, we get this little dip. I'm at 97,000. It breaks to the new high. I'm now at 109,000 on the day. Then it pulls back right here, and we get another micro pullback right there. Now I go from 109,000 to 119, 154, 147, a little dip down, and then a final push higher right there, which puts me up at $175,000 on the day. And I left money on the table because after I finished trading, this ended up going up even higher. How high did it go? Well, I stopped trading it up around $40 a share. It went up to $53 a share at the open right here. The only problem was at the open, the spreads actually got bigger. And I think the reason they got bigger was because of market orders. Traders started using market orders, which you cannot use pre-market. And so the spreads got bigger as those high frequency trading algorithms were taking advantage of the market orders, keeping the spreads bigger so they could make more money. So I did not trade it past the open. I watched it through here. I saw it rally. I watched this pullback. I was tempted and I said, no, just leave it alone. But in hindsight, I left some money on the table. But you know what? I really shouldn't complain. life is good. I'm so grateful for these opportunities. I mean, this is really, to me, we're just in a market where we're seeing such incredible volatility. And the fact is, we don't get this every single day. We get micro pullbacks every single day, but we don't get a 10-point squeeze on a micro pullback every day. A 10-point squeeze is really special. And man, we got it today. Now, the thing is, I step up to the plate on pretty much every trade I take, and I never know what I'm going to get. And I'm swinging not for home runs, but just trying to hit some base hits. Now, what I'll tell you when it comes to trading is one of the hardest parts is your emotions. It's the mental battle right here. So what do I mean by that? Well, trading, as you know, is risky, and you will experience your fair share of losers. The problem is, what happens for most beginner traders, including myself when I got started, is we come into the market, we jump in, and what do? We lose money, right? So all of a sudden we take our first trade. Well, we'll do it here. So we take our first trade, and what ends up happening is we lose money. And what do we feel? We feel sad, right? And what does that encourage us to do? Take more trades to make back the money we lost as quickly as possible, and that results in losing more and more and more. And that becomes a downward spiral. I want to propose an alternative to this cycle. The alternative is, instead of shooting from the hip, focusing on A+ quality setups, trading with small size in the simulator, building self-confidence, feeling comfortable increasing your size in the simulator, then going live and continuing a positive feedback loop. So let me show you what that looks like. To begin, you start with A quality setups. That means stocks that meet all 5 pillars of stock selection, as I've already shared with you. That'll increase your accuracy, it'll increase your profit loss ratio, and it'll increase your consistency. It doesn't happen overnight. It takes time. You have to pay your dues and build experience, build your own track record. But once you've built a track record in the simulator, then where do you go from there? With the simulator, with a strong track record, you've got the conviction and the self-confidence to increase your share size, to go live, and that creates a positive feedback loop. So I'll tell you that right now, if I had a red day, how would I feel? I would look at my metrics. I would look at the last 30 days, the last 60 days, and I would say to myself, Ross, you're still the same trader who just did all of this. So you made $1 million in 60 days. Well, now 1.2 million when you add in today's profits. So you had a red day. You know what you're doing. You've proven it here. You get back on the horse and you rally back. And that's what the simulator is really good for, is you build that track record. Because if you start with real money and you lose money on day one, you have no track record to fall back on. All you have is shooting from the hip and hoping that maybe something will change. And there's no likelihood that it will until you first gain experience. So you got to go slow and steady, build that track record, and do it in a sim. Now, I encourage you guys to download my micro pullback strategy PDF. But for those of you guys that want to jump right in, you want to trade side by side with me, I'm going to put the link for a 2-week trial in the description of this episode. You can do a 2-week trial at Warrior Trading for $20, and that trial will give you access to this software right here. My scanners, my charts, my news feed, plus our chat room, my live audio video broadcast, and a selection of classes that'll teach you more about my strategy and how to use this software right here. Now, I'll remind you as always, trading is risky, so I want you guys to take it slow. But you know what? For members at Warrior Trading, full-fledged Warrior Pro members, we give you guys access to a trading simulator so you can practice learning how to trade the right way. Now, if you found this episode interesting, I hope you hit that thumbs up. I hope you are subscribed to the channel, and I'm going to put links to a couple other full-length trainings right here and right here that I think you guys will really enjoy. And let me remind you, as always, to take it slow. Please remember, my results aren't typical. Slow and steady is the way. I'll see you for the next upload real soon.